Hello, friends. Today, I want to talk to you about a company which benefits every time a semiconductor is made. Meaning, anytime Nvidia designs a chip, or AMD makes a chip, Broadcom makes a chip, Micron makes a chip, Samsung makes a chip, Qualcomm makes a chip, this company gets piece of that revenue. Isn't that wonderful? You see, right now, one of the biggest problem in the market is nobody really knows who is going to win the AI race. Sometime Nvidia is all-time high, sometime it's Google, sometime it's Amazon, sometime it's Meta, sometime it's Micron, sometime it's Samsung, sometime it's Cynix, sometime it's SanDisk. Anyhow, you get the picture. There's a lot of conflicting ups and downs happening in the market, sometimes within weeks. So market gets confused, and obviously we end up making mistakes because we think that now this particular company is going up, now this particular company is going down, and we end up selling something that would otherwise be okay over the long run. So instead of playing that game, I can actually participate in this one company because every time any of these companies make a chip, they have to pay this company in one way or the other. So I'll share my thesis on this company. I'll tell you what are some of the positives and negatives. I'll also talk about when do I want to buy it? When do I want to sell it? What are some of the red flags? What are some of the tailwinds behind this company? I'm going to share it all with you in this video. But I need a couple of favors from you. Number one, if you learn something new, post it in the comments, please. I'm not a video guy. I don't like to talk to myself. I want to make sure that whatever I'm saying, I'm actually helping someone. So your two lines, you learn something, you agree with something, you disagree with something, leave it in the comments. You can certainly subscribe to the channel and like, but more important is your comments because I want to talk to you. So that is a big favor I have to ask. Number two, if you happen to be in Austin market, then I encourage you to come see me in person. So I'm doing a live event in downtown Round Drop on May 16th, 2026, just in case you happen to watch this video sometime in future. This is a live event from 9 a.m. to 3 p.m. I'll have breakfast there, I'll have lunch there, and we'll talk about taxes, we'll talk about finance, we'll have fun together. So I do these meetups on a regular basis. If you want to organize one in your area, then reach out to me. Just go to taxcodeadvisors.com, reach out to me if you want me to speak at your event. Maybe you're doing something together with your friends, family members, or maybe you have a nice business gathering where you're looking for a speaker to share some thoughts to help people build wealth in this country, then invite me. Go to taxcodeadvisors.com and you can reach out to me from there. Before I begin, let me also remind you that I'm not an investment advisor, so don't buy something because I said so or sell something because I said so. I'm not here to give you that kind of advice. I'm a tax advisor, so if you need tax advice, set up a consultation and we'll talk properly in private. All right, let's get back to this company. 1960, the two MIT classmates, they started a company called Teradyne in the basement of Boston hot dog stand with $10,000 between them. Their first product was a simple diode tester. Their insight was ahead of its time. As chips become more complex, the cost of defective ones reaching the field would far exceed the cost of catching it during production. That idea, that testing is not optional, it is the last line of defense before a chip ships, has compelled every major semiconductor manufacturer in the world to walk through Teradyne's door for 65 years and counting. Now, you might say, well, Deepak, how can you say that? How do you know this company will continue to grow? Well, thesis is very simple. Every semiconductor chip ever made in your phone, in your car, maybe you're familiar with Nvidia GPUs, AMD CPUs, they all need to be tested before they can be used. If even one transistor out of billions of transistors fail or there's some sort of problem, that transistor can crash a $60,000, $100,000, $200,000 server. It can make your Tesla go bizarre, and it can create all kind of damage. So obviously no company would want to do that because that would be very dangerous for them, certainly for the stock market as well, for their particular stock. Teradyne makes the machines that do this kind of testing. It is the quality checkpoint the entire chip industry must pass through. There are only two players in this. There's one Japanese company, I think it's called Advantest, and Teradyne. There are some smaller players, but these are the two major players. Together, they control roughly 100% of the market. So that makes it very difficult for new players to enter. Now, Teradyne does you can say they have three business segments. First one is semiconductor testing, which makes up 87% of their revenue. That means they test, your AI processors. You probably have seen, for example, Micron is doing really well, Samsung is doing well, Cynix is doing well. Well, why are they doing well? Because we need more and more memory. Well, guess what? Memory is also a chip. And who tests those chips? Teradyne. And then you got cell phones, whether it's an Apple phone, Samsung phone, or whatever phone you use, they have chips in as well. And there are many other things I can name, but you get the picture here. So all of these chips are tested using automated test equipments. These equipments cost millions of dollars and they take months to build. Why? Because think about it. Let's say Micron. If they have a memory chip that is they're selling today, do you really think they're going to sell the same chip a couple of years down the road? Probably not. They're going to come up with something new. When they come up with something new, they need a new test equipment. What about Nvidia? How often do they change their chips? Or AMD or Intel or many other companies that are building chips. These days, you're even talking about, for example, custom chips. Google is making TPUs, and there are a lot of custom chip designers as well. Broadcom making chips for a lot of different companies. Well, guess what? Every single one of those chips need to be tested. Every time a new chip comes on board, most likely will require a new machine for testing purposes. 87% of the revenue for Teradyne comes from this segment. So I want you to think about this and tell me, do you really think we're going to have more chips in 27, 28, 29, or less chips? If your answer is we're going to have more chips, then why wouldn't you be bullish on Teradyne? Second step. Now, you probably all watched the video Iron Man. And in Iron Man, we see Iron Man doing all kind of crazy things. But more importantly, he has an assistant. And these assistants are these robotics arms, right? Helping him do different things. Well, guess what? Teradyne makes those arms. For real, I know. So they call them, I think, cobots. Basically, they're automatic arms that can help you. So they can do different things for you. So if you have a warehouse, they can bring stuff to you. They can install things for you and stuff like that. So my second question to you would be is, do you think that kind of technology will grow in the coming years or not? I think if you're like me, you'll probably say, heck yeah, I think we need more of that. Okay, then old-fashioned stuff. We still have circuit boards. We still have wireless chips, defense electronics. There's silicon photonics. I think on our WhatsApp group, there's a lot of conversation around photonics. So a lot of people are super excited. But guess what? All of those need tested. So all those test equipments come from where? Teradyne. So you can see that no matter which area you look at, you will arrive at the same conclusion that Teradyne benefits from all of those innovations. Now, I want you to pay attention to TSMC, Taiwan Semiconductor Manufacturing Company, the factory that physically makes chips for Nvidia, Apple, AMD, Google. Every chip TSMC produces must be tested. Teradyne recently won a contract to supply TSMC specifically for GPU wafer level testing, being embedded at the world's largest chip maker in the most significant new win in years. Now, this just happened. Can you imagine what about the revenue that will come from this in the coming years? What is AMD going to do? Intel going to do? Nvidia will continue to do. You get the picture. Let's talk about Nvidia because they are the shark. Everybody knows about Nvidia. Nvidia makes the dominant AI training processors, H100, H200. Every Nvidia chip must be tested before shipping. Teradyne received its first multi-system GPU testing production order in Q1 of 2026. Just this quarter, a pivotal new market entry that management expects to scale materially in 2027. So I'm telling you this because if you take a look at the stock price of Teradyne, it's all-time high. But I'm just telling you where the new opportunities are for the next year. Then take a look at Cynix and Micron and Samsung. Guess what? All three companies that make HBM, high bandwidth memory, the ultra-fast memory stacked directly on AI processors. Teradyne Magnum EPIC tester is the industry standard for HBM. More AI chips, more HBM equals to more Teradyne memory tester orders. What about big companies, hyperscalers like Google, Amazon, Microsoft, Meta. I mean, these guys are the ones spending a lot of money in CapEx, right? We just got the earnings report from these companies and we saw what happened to Meta stock, almost dropped 10% because they are spent. I mean, it was kind of interesting to see that they increased their capex by $10 billion. And right afterwards, I think Meta lost almost $170 billion of market cap. So weird. But anyhow, that's how the markets are. They're always overreacting and creating opportunities for long-term investors. Well, hyperscalers design their own custom AI chips. In matter of fact, that trend is actually growing. And they get them manufactured at TSMC. And guess what? Samsung. Those chips must be tested. 75% of Teradyne's system-on-chip testing revenue in Q1 2026 came from these hyperscaler chip programs. What about Apple? I think a lot of people don't really talk about Apple, but what you don't know is that Apple designed its own A series and M series chips manufactured, once again, at TSMC. And guess what? They're also tested on Teradyne. I think Apple was once Teradyne's biggest growth driver. Now, phones are the soft market right now, but Apple's next major product cycle could revive that segment. It used to be Apple was the hot thing. It's just not that hot anymore. Then there's something called contract manufacturing. In 2026, Flex began both deploying Universal Robots in its own factories and manufacturing Universal Robots products for Teradyne globally, a partner that is simultaneously a customer and a manufacturing ally. So you can see that Teradyne benefits from this entire ecosystem. So why would I want to own it or not own this company? Well, I already gave you two reasons, right? Number one reason is I'm so bullish on semiconductors, so bullish on these chips that every chip is manufactured regardless of how and who and where. Teradyne benefits from it. So that's one good reason. Number two, it's very hard to enter into this market. They pretty much control the entire market. So that is pretty cool as well. I like businesses that control the market. Number three, right now, if you take a look at, maybe not right now because we're in the earnings season, but once we're done with earnings season, people are going to get more focused on fundamentals. People will start asking questions. One of the cool things I like about Teradyne is their GAAP earning versus non-GAAP earnings were only off by 0.03. That's right, 0.03. That means they're not using no accounting tricks. There is no weird kind of depreciation or something else funky going on. Basically, what you see is what the business earned. So very clean balance sheets. Another thing I love is the acceleration of AI revenue. Like I said earlier, it used to be 40%, then it's 60%, then it's 70%. And hey, next year it could easily be 100%. And then what I said earlier, the GPU testing win at TSMC plus Nvidia is the biggest new revenue opportunity that is going to happen in 2027. So that's a new product line altogether. Memory stocks. I'm so bullish on memory stocks because I think memory is really a bottleneck and this is only going to grow. Like, think about it. This video that I'm making, I'm recording on the camera. I have to delete like 10 different videos before I could record this. So I need more memory. My computer crashes when I try to upload these videos sometimes. Computer need more memory. And I'm not really a techie anyways. There are a lot of other people who do a lot more technical work than I do. So I'm sure they're also struggling with the memory anyway. So anyhow, my main point is that this HBM4, the next generation AI memory, this transition is going to create a guaranteed tester replacement cycle in 26-27, regardless of broader market conditions. Because, like I said, we need much better memory. So those are some of the reasons why I am bullish on it. But there are some reasons that gets me worried. Mobile business is not really doing really well. This opportunity of GPU revenue, that's not really going to start till 2027. They still have a competitor, so it's not really a monopoly just yet. It's more like a duopoly. So they can always come in and eat their business as well. But one of the biggest red flags, actually, let's say there are two red flags. Number one is PE. The stock is still trading, I think, around 50, 60 PE. Even forward PE is probably around, let's just see, right now it's 63.58 as of recording, and the forward PE is 35.37. Stock is trading roughly at 345 as I'm recording it. But what's interesting is even though stock has gone up a lot, the PEG ratio is only 0.76, meaning From that metric, the stock is still undervalued. If the stock were to value at peg of 1 or maybe 1.5, then stock can easily go up to 500, $600. So there's a lot of opportunities. Just giving as an example, but hold on to that thought for a second. Another thing that I'm really worried about is that management openly cannot see clearly beyond Q2. So they say, look, don't ask me a question about Q3, Q4. We don't know what will happen. And I think one of the main reasons is typically a lot of investments happen early on in the year. Because at the end of the year, you want to kind of see how these things work out. If I'm setting up a new factory, if I'm changing something in my factory, I don't want to do that towards the end of the year because you don't want to look like something bad happened at the end of the year financial statements. Whatever problems might be, you want to resolve them throughout the year. So typically in these businesses, first 2 quarters are strong and the next 2 quarters are not as strong for that reason. It takes time for you to digest all that stuff. So I would be very carefully as to when I take the entry in the stock, even though I like the company, but I think the stock can certainly come down, maybe 20%, 30%. And that is when I'm going to take the entry. Look, at the end of the day, Teradyne is a 65-year-old business. They have record quarters after quarters. They have very clean earnings. Every now and then, stock will sell off 20%, 30%. When that happens, that is a great opportunity to get in. These are technical reasons. People make a lot of money, then they need to book profits, they get out. Typically what I see is after the earnings season for about a month or so, stocks kind of sell off, it builds a nice base, and then it starts to recover. That is the time when I would like to get an entry. If I get the stock around $300, I would love to start my position. And then if it ever drops to a little bit less, maybe another 10%, 20% correction, then I will add to it at that time. Now, when would I sell this stock? Well, if I ever see TSMC giving us signals that the semiconductor demand is slowing down. That is the linchpin because TSMC makes all these chips for everyone. So if I want to see how Teradyne is working, I'll focus on TSMC. As long as they're doing great, as long as they have more demand for chips, as long as Samsung is giving the same signals, Micron is giving the same signal, chances are Teradyne is going to do really good. But like I always say, how much money you make in a year will depend upon when you buy the stock. So sometimes people say, well, Deepak, is it a mistake to buy the stock at all-time high? Not really, because over a long term, like for example, you could have bought Samsung at $150 and the stock drop afterwards. And if you kept it, today you're sitting at 500 plus. Same thing I can say about AMD, Nvidia, all the great companies out there. So I'm just saying, even if I buy the Teradyne right now, I think over the next 2-3 years, I'll be okay. But in a short run, the stock can drop 10, 20, 30% at any given time. And all stocks can do that. Sometimes I don't know why people get really worried that, hey, I bought something and it dropped by 30%. That's normal. That's how it works, right? So the idea is you start small and you buy it when you get a great discount. That's the way. Don't need to chase it. Don't need to run after the stock. If I miss out on Teradyne, there's always going to be another opportunity. So I love the companies, but I have to be patient with this one to get the right entry into it. So I hope you love this video. If you have other thoughts, if you have any ideas as to why I should not get into it, then let me know. But overall, everywhere I look, semiconductor demand is only growing. Robotics is going to be the new sector that people are going to focus on. And then you always have the regular testing demand anyways. So the sector is bullish. There are a lot of tailwinds. As long as new innovations continue to happen, which I think they will, then Teradyne will do just fine. But when that cycle stops, Teradyne most likely will drop by 50, 60, 70%. It had happened in the past. But back then, semiconductors used to be very cyclical. But right now, we are in a super bull cycle. Take a look at so many data centers that are being built just in the United States alone and China, but then they are going to show up everywhere in the world. You see what's happening with India. They are building a lot of data centers. And every time you want to put a server in there, that server going to have some sort of semiconductor, and that semiconductor most likely got tested by Teradyne. So overall, extremely bullish, just need to time the entry. And then whenever I see TSMC slowing things down, giving me signal that things are slowing down, that's my clue to exit out of this stock. So that is my thesis on Teradyne. If you have a company on your mind that you want to talk about, then share it in the comments and I'll look into it and I'll share my analysis on that company. Thank you so much, guys. And once again, if you're in Austin, then come see me and do not forget to comment on this video. I'm looking forward to that. Thank you so much and I'll see you soon.